Welcome, everyone. Thank you for joining us for today's webinar. My name is Alina and I'm your moderator today. Just a little housekeeping before we get started. If you have any questions during the presentation, please write your questions in the question box, which is located on the bottom of the screen. Ideally, please write to whom the question is addressed. The questions will be answered during or after the presentation. I would like to mention that your active participation will be very much appreciated. Please also vote for the questions, putting the thumb up or down. If you don't see the presentation in full screen, please do a refresh. Our webinar, The Impact of Credential Staffing and Account Takeovers in the B2C Sector, will be presented by two speakers. Derek Brink, Vice President and Research Fellow at Aberdeen Strategy and Research, and Gavin Holzman, Sales Director at Nevis. Thank you very much, and I hope you will enjoy this session. The stage is yours, Derek and Gavin.
Alina, thank you. Hi, everyone. And Gavin and I will be very pleased to talk about this topic. It's a cool topic. Here's a quick summary for you. The attackers who are financially motivated have found credential stuffing and account takeovers to be very effective against online consumer-facing, we're talking about B2C sector here. So it's a very effective way to commit fraud. And we did a project at Aberdeen with Nevis. It's a very cool project. Can't wait to share the findings with you. But we looked at 10 different B2C categories in the EMEA region, and we were able to quantify this. This is what's so interesting about it. We can all talk about these things in a bad things could happen kind of way, but we're actually able to measure this, which I find interesting. And it turns out that we demonstrate that the impact, the consequences of successful account takeovers is risen to a level that's beyond just the nuisance level, the cost of doing business. It's a financially material business risk. It warrants doing something about it. So that's what we'll talk about today, and what are people doing about it. So as an analyst, I'll kick off. Gavin will join in just a second. I sort of have to do this. I guess it's part of the analyst rule or something, that have to give some definitions. You probably know this, but credential stuffing is, I'll do this quickly. It's the process of automating the input of user credentials into the login pages. Typically, this automation is done with bots, programs that are designed to do this in an automated and well-defined way. And the goal of this is an account takeover. That's a successful credential stuffing results in a takeover of the account by an unauthorized party, and that's the means by which they commit fraud. Why do bad guys care about this? The financially motivated attackers, that is. There's three obvious reasons. The first one is that these digital account-based relationships are based on the credentials, and as we said in the summary there, it turns out to be an effective brute force way to exploit weak or compromised credentials and gain access. Number two, it's a lot easier to do in an automated way at very large speed and scale. Bots is part of that, but also they've compiled these massive databases of credentials from other breaches. And third, they're paying off, which is, again, they're financially motivated, so it's paying off in a financial way. We'll talk about that. It's the way most B2C organizations communicate and maintain relationships. There's lots of ways. This is from the study that we did, but I've highlighted in the red ring there. You can probably see it if I move my cursor. I think you can. Websites and mobile apps. Almost everybody does that, and so it's just central to the way these relationships are made, and that's why the bad guys focus on that. This is what I mentioned already. They've combined not only the bots, but also for their own benefit, their convenience. Multiple mega breaches of the past, and this is a couple of years old almost now, but at that time it was about 3.3 billion unique username password pairs that they can leverage. And not that any of us on this call would do it, but a lot of people reuse the same passwords across multiple accounts, and so that makes this credential stuffing all the more effective. So there's that, and then they're making it pay off. This is from the study. Direct consequences from successful account takeovers: you can create new accounts, you can do fraudulent transactions, you can transfer funds or other fungible items of value like loyalty points or rewards. You can make fraudulent purchases, you can steal services like digital content. So there's a lot of direct impacts, and those are some of the things that we try to measure. From the defender's perspective, the flip side are the same three reasons. It's why we're motivated to pay more attention now. We do use credentials that's central to the way we manage relationships with the clients, the B2B consumers. The bot-driven attacks are more and more prevalent and growing. I think it was in the news. Was it, Gavin? Was it just in the past week? Was it PayPal? I think was a
Yes,
very
correct.
public victim, of credential stuffing attack.
Correct.
In our study, about 3/4 of all the respondents had reported some kind of some number of their online users had experienced a successful account takeover in the previous 12 months. That's pretty high, 3/4 of all respondents. And again, between the direct and the indirect, it's grown beyond this basic cost of doing business. So these are some of the indirect consequences. Maybe you have to deal with the call center, which costs money. The second one I actually included in my analysis, they might leave you. I've had an account takeover. I don't trust you anymore. I'm going to leave. Maybe there's a data breach. Maybe there's more scrutiny from regulators. Nobody wants that. So yeah, that's the kind of intro part. Kind of had to do it. I kind of jump in now to the quantification part. This is really the cool part of this project for me. We talk about things a lot in our industry, and that's good. We need to understand it at a technical level, what happens and how does it happen. But we need to make better informed business decisions too. And to do that, I feel, there's a movement towards quantifying things and talking about it in terms of risk, the way risk is properly defined. So let's talk about that. Here's the segments that we looked at. I won't dwell on this. You can look at these slides later, or there's a report too that you can look at. In a sort of financial oriented sector, you can see commercial banks, credit unions, savings institutions, fintech, property and casualty insurance. There's those 5. And then there's another 5 that we looked at. I think, Gavin, these are segments that Nevis has customers in: consumer electronics, healthcare provider networks, online gambling, telecom, utilities. So these are the ones we looked at. The goal, again, we're trying to measure these things, so we're able to, when we were successful at talking to knowledgeable companies and of sufficient number to be able to do a statistically meaningful kind of analysis here in each one of these 10 sectors. So I'm going to show you the results of that here. We break them into 2 parts because there's just so many. There's 10. So there's the first 5, which is the financial oriented ones, and the second 5. On the top half of this slide, I'm waving my cursor again. These are the inputs that we got from the primary research. So these are dollars per monthly active user per month. How much revenue you're getting, basically. You can see, because we talked to multiple companies in each segment, we're not just giving a single number. That's not that useful. But here's the range. In commercial banks, it was between $28 and $300 per monthly active user per month. The median was about 60. And so we don't have time to read all of them, but you can read these at your leisure. How much did direct fraud from account takeovers cost you? And that's expressed as a percentage of the revenue. That's a common way to do it. It's a common size format. Business people like that. We look at cost as a percentage of revenue. So you can see, again, for commercial banks, between 0.3 and 2.85%, fairly big range. The median is about 0.75%. Total cost of monitoring and managing currently, trying to keep these things to an acceptable level, about 82 cents per monthly active user per month. So that's the current sort of amount you're spending to try to keep that down. And what percentage of your monthly active users did experience an account takeover as a result of a successful attack? And again, sticking with commercial banks here as an example, 0.2 to 0.5, the median about 0.35. So those are the inputs that we found from talking to the businesses in each sector. And the outputs based on the analysis, this is where I got to do some math. Again, we don't have time to do it all. I think you can read the report and get a little more insight, or I'm happy to share with you privately if you want to message me after. But direct impact expressed as a percentage of that revenue. And I modeled also the attrition part, but only the attrition of indirect. So it's the direct cost plus the indirect attrition part. For commercial banks, 1.76% to 5.28%, and with a median of 3.33%. Let me show you quickly the same sort of thing for the other 5 categories. I'll just let you kind of glance at that in a second. I'll show you graphically in a second here. I think it'd be easier to grasp, but it varies by industry is the point. And yet the point that we talked about at the beginning is this amount at the bottom here, it starts to become material, financially material. It's big enough, too big that you can't ignore, big enough that you need to pay attention to it. Here's a quick thing people might like to do. You could personalize this for yourself when you have a cup of coffee and a little more time. Suppose you're in the commercial bank segment that we just looked at. Suppose you have 100,000 monthly active users, and suppose in your specific case it's $210 per monthly active user per month. That was within that range that we looked at. So you do that math every month, then you'd be getting about $21 million in revenue from that base. And the impact, go back 2 slides and you could just pick this, that range of percentages, and do the math on 21 million. It's between 370,000 and 1.1 million dollars per month. That's the cost of successful account takeovers as a result of credential stuffing. Annualize that, it's between 4.4 and 13.3 million dollars per year. Quick back of the envelope calculation. You could do this for any one of those 10 segments that you're in. Just kind of look that up from the table, and you can kind of get a sense of it for yourself. Gavin, I think you did this part, which is I think quite valuable. You took the same sort of idea, but you kind of said, okay, well, that's the impact, but how much would that's the headache, how much would the cure cost? And maybe I'll just let you speak to this real quick.
Yeah, absolutely. Thanks, Derek. So, I mean, I also looked into the forgotten password process, and generally the customer experience, and customers that experience a bad experience or have a friction sort of engaging experience tend to be quite fickle and tend to leave. So dealing with call centers is not ideally what customers would like to do. They want that sense of instantaneous gratification. They came to the site to perform a particular action, and then they'd like to leave. So looking at commercial banks, again, with your example there, Derek, on approximately 100,000 users with a $210 monthly revenue per user, we've seen that sort of at these different percentage levels, the potential revenue loss as a result of that forgotten password process from customers is pretty substantial. At the 2%, you're up at $420,000 on average, and down at the bottom end, 0.5%, you're still quite high at $105,000. And in comparison to the cost of the Nevis solution on a monthly basis, we are well below what that potential revenue loss number may be. So it's definitely an attractive pricing model, and retaining those customers and getting that lifetime revenue out of them as well.
That's a good analysis, and it's really part of the better informed decisions that I mentioned earlier. That's what we're trying to do, is help with that. And these kind of numbers are helping to understand the magnitude of the risk. It's not necessarily a single number. There's some variability here, right? It could be between 1.5 and 2%, and so it's between these numbers here, right? So we get that. We're helping them to make a better informed decision. But at the same time, we have to say, well, okay, we could do something about that with a solution like the ones you offer, Gavin, at Nevis. And there's an expression that I like. I don't know if it translates to everybody listening, but is the juice worth the squeeze? So this is, if we're going to make this investment in a solution like yours, it's a very small relative to the cost, and presumably it's going to bring that impact.
Correct.
Maybe we can never claim to zero, but maybe it brings it significantly close to zero.
Correct. And what isn't shown here, this is the revenue loss as a direct impact. The operational costs for those call centers is an additional cost that also needs to be added to this number. So that number is quite conservative. It can grow quite considerably depending upon how much engagement you have as well.
Yeah. And this is, I think, the point of the whole webinar today. Here's the most detailed slide I have, and I think it's important, though, so take a minute to do it. We are short on time, but you need to put the impact of credential stuffing and account takeovers in context for the senior business leaders. And I feel, this is what I've tried to do here, is you show that it's financially material, meaning material is a, excuse me, a finance term. I define it on this slide here. Materiality is usually if it's less than 5%, it's deemed to be not material. It's between 5 and 10%. It's deemed to be kind of a judgment call. If it's 10% or more, it's deemed to be financially material. You need to do something about it. So that's the general idea. What I've done here for each of those 10 industries is I looked at the historical data trailing 12 months, like looking backwards 12 months over a 5-quarter period. So I've got 5 measurements here of the earnings before interest, tax, depreciation, and amortization. Finance people they say that as EBITDA. It just means profitability, basically, before any financial type accounting things. That's what the EBITDA is those financial moves that you do after your kind of core profitability. So the green bars here in this chart are the profitability for each of those industries. It's kind of the 5-quarter average, if you will. And I ranked them, from the highest over here, fintech, to the lowest over here, healthcare provider networks. So that's the standard. That's the measuring stick that we're using. In orange here, that's the data we just looked at. So the range here, again, I didn't use just a single number. We talked to multiple companies, but I'm showing you the whole range between the low and the high. The median's here, 10.4. That's the dot here. You can see that's expressed now as a percentage of the green bar. And so on for every industry. Now, some industries over to the right here, you can see it's very significant compared to profitability. I mean, it dwarfs profitability, actually, the impact for healthcare provider networks and online gambling and property and casualty insurance. For all of them, though, if 10% is the threshold of materiality, every single one of those industries at some point on the range crosses that threshold. And that's remarkable. So the conclusion is that it's grown, again, to be more than just a nuisance and a cost of doing business. It's grown to be material in the sense that you need to do something about it. And to your point, Gavin, this analysis too is understated and conservative. I didn't model all the costs. I mean, you can get crazy with these models, and I just try to keep it relatively simple, the direct costs, and I also did include the attrition sort of indirect costs as well. But the actual cost is even higher. Do you want to make any comments on that? I know it's the busiest slide I have, and we want to move on.
Yeah, look, I mean, I think based on what you've said there, the materiality is across the sectors, and we have participants here from these different types of sectors as well. So seeing this and having you explain it is valuable, and understanding. I mean, our organization deals with all of these sectors, aligning their usability with their security and mitigating some of these risks associated with the account takeovers and credential stuffing attacks. So exactly. We do have a solution to mitigate these.
Exactly right. Yeah. We should start to talk about that now. So what are people doing? And so here's what we saw, and then you're going to talk quite a bit more than me in this next section. We asked about the drivers behind investments they're making. Fundamentally, there's two high-level strategies. It's kind of simplistic when you think about it, but again, I'm an analyst, so this is what I do. But the one strategy is you could try to attack the bots. You could try to say, look, credential stuffing is carried out by bots, so let's have some kind of bot detection and mitigation capability. So some companies are actually doing that. And the other one, which we're going to talk here about today, is, what are they attacking? They're attacking the weakness of traditional usernames and passwords. So why don't we invest in things that make user authentication stronger and maybe password less? And so that's what we'll talk about here today.
On that point, Derek, you were very kind to include me in that sort of suggestion of not reusing passwords, but I mean, I'm guilty of it, and I know we've done our study. There's 50% of people do tend to reuse their passwords across the various different online accounts that they have. So it is a clear flaw in the process.
Yeah, it is the time people make resolutions for the new year, so maybe we should all resolve to not do that anymore. We asked a question in this study of all the companies, so this is the aggregate of all of them. I didn't break it down by industry, but what's the current use and kind of stacked on top of that planned use. And really the conclusion I've tried to say in the headline is, if you look at things like passwordless, relatively smaller adoption, say, compared to a multi-factor mobile app, which is higher currently, but the planned adoption is very high. So the point is that we see a shift happening. I think that's my conclusion anyway. We see a shift happening in the direction of the convenience and cost effectiveness of passwordless approach. And so I'll be glad to move the slides because I still have the control, Gavin, but I think that this is to you for the next 2 or 3 slides.
Yeah, great. Thanks, Derek. And to your point there, around sort of the move towards passwordless, we all carry these devices around with us every day where you have this biometric capability as part of your Android or Apple device, allowing you to leverage that technology and add that layer of strong biometric customer authentication. And that top point with regard to delivering that outstanding customer experience aligns with our solution, in that often you have within organizations this infighting with departments where your IT team and your product team are at loggerheads, as your IT team want to put password policies in place that essentially change regularly, that are quite cumbersome for the end customer, and your product team want to get the customer through the front door as quickly as possible. And allowing your customers through that door, but putting this policy in place that is quite cumbersome, sort of don't align, and offering and utilizing a biometric technology to allow that customer journey to be frictionless and smooth gives you that opportunity to deliver that outstanding customer experience. So that adoption, as you sort of saw in the previous slide, is as a result of all of the technology that we currently carry around with us. In addition to that, we've seen through various different organizations, we show in this particular slide an online betting and gambling image, but developing that trust and speed have held the retention of those players and those customers and those members and those individuals and users for that much longer. They trust the environment that they're logging into. They know that their PII data is safe. They know that all of their user data and their transactional interactions are safe. So aligning that trust and speed and usability retain those customers for longer, and you have that longer lifetime net revenue from those individuals. And the term there with regard to digital acceleration, we've gone beyond just digital transformation now. We're accelerating all of the digital services that we offer and we utilize as a result of what I said a little bit earlier with regard to having all of this technology available on our laptops and our mobile devices and allowing us to leverage and utilize those devices. And the bottom two sort of talk to this exact webinar, reducing login friction and account takeovers. Associated with that is obviously the reputational and revenue loss as well, substantial, as you mentioned a little bit earlier, Derek. PayPal are in the news that they've had a credential stuffing attack, and reputationally, it's hard to quantify exactly what the number is associated with that potential attack, as well as what the revenue loss is that sort of comes as a result of that. And finally, the reducing the friendly fraud, and by virtue of utilizing a biometric authentication solution and the cryptographically signed process of end-to-end authentication. So a couple of points around why a secure authentication solution is more important now than ever.
Oh, could I tell you that this is the analyst in me, Gavin, again, but not everyone may be familiar with the term friendly fraud. Maybe they are, but if you just quickly define that for folks.
Sure. If I can touch on the betting and gambling sector again, if I, for example, had a gaming account with a particular operator, and my son had access to my account as well, and he deposited £1,000 or $1,000 or €1,000 into my account, lost that money to the casino, he could charge back. He could charge back, and I could charge back on his behalf and say it wasn't me transacting on the account, it was my son. Where in fact it actually was me the entire time transacting on that account. So it's a fraudulent activity on an account whereby you leverage off other individuals being able to access that account and indicating that they've committed fraud on that account.
Yeah, cool.
So it's costing organizations huge amounts of money in terms of chargebacks, in terms of that entire fraudulent process. So with a biometric solution, you're able to authenticate the correct and registered customer is authenticating and transacting on that account or depositing and withdrawing money. Yeah. Additionally, changing details on an account. If you'd like to change address details in the banking sector, an amazing attack vector for bad actors to have a credit card sent from one address to another address. They change the details and then they're able to commit fraudulent activity on that account. So ensuring that the right individual is actually changing those details is imperative.
Got it.
You can jump to the next slide. So what I'd like to just show here is just touching on the three pillars that sort of Nevis offers in terms of enabling the great and secure customer experience. It's the customer experience that we spoke about in terms of offering that frictionless journey. It's the security. So how do you align the customer experience and security with the biometric solution? And then the privacy and regulatory compliance elements. So protecting the data of the customer. Certain sectors in Northern America, for example, have actually stipulated that organizations have to offer strong customer authentications with something that you know, something that you have, or something that you are. And our solution meets the bottom two. It's something that you have, which is your mobile device, and something that you are, which are your biometrics. So aligning those three pillars, all of them underpinned by our customer identity and access management infrastructure, then allows a unified identity in terms of your digital customer experience and the various different digital interaction channels that you may have with your customer, whether that's a web-based solution, a pure native application solution, a mobile web solution, whatever that may be.
If I could just comment real quickly here, there's always been three main buckets of value to the business, and you've got all three of them here on the slide. So the traditional security perspective is I want to keep bad things from happening. So that's in here, and you've got the security bucket. That's kind of a cost avoidance kind of a thing. You've also got the enablement side on here, the customer experience. That's you're going to make more revenue and have happier customers, and that's a positive, virtuous circle there. So that's the enablement side. And then in the middle, privacy and compliance, those are things you kind of have to do. So you want to do them most cost effectively, and so there's typically a cost savings aspect there too. So well done. You got all three of those buckets there nailed.
I mean, maybe just to touch on that point though. In particular, as I said, in some of the regulated spaces in North America, regulators are now driving and defining roadmaps, whereas before it was sort of what solutions would make us the most revenue. So regulators are calling for strong customer authentication to be a part of the offering, but operators are looking at it and saying, well, this is actually a competitive differentiator. If you say have an OTP process in place to allow that multi-factor authentication, you're reliant on potentially the network provider being able to deliver that SMS or that OTP, or the player or the member or the user may never receive that for some reason, or there's a man in the middle attack as well. So regulators are driving a lot of roadmaps in that regard though. But as a competitive differentiator, we've definitely seen feedback from the market as to the solution being aligned with that customer experience. So I agree with your points there as well.
We've got about 3-4 minutes here.
Yeah, sorry, I will fly through this quickly. Just the product portfolio at a glance, just briefly looking at our different solutions. We have our security suite, our authentication cloud, and our identity cloud. The suite is a fully fledged customer identity and access management infrastructure. For more complex requirements, a lot of the banking customers in Switzerland utilize that solution. On the right-hand side, our identity cloud is a no-code standard integration process. It's a cloud-based SIAM solution, customer identity access management solution, easily to deploy. And in the middle, we have our authentication cloud, which is a supplementary strong customer authentication layer to your existing identity and access management infrastructure. I can go into all of these in more details following this if anyone wants more information on them.
Good.
And finally, just our solution is a passwordless everywhere solution. So depending upon your customers' needs and requirements, we have a solution that is a web-based authentication solution only. So you don't need an application in the process. We have a native SDK integration into a native app. So you could implement that into your existing application, or we have a branded standalone access app that has the same functionality. So we've aligned with our customers' demands and requirements to give solutions across the board in terms of what their customers are asking them for. We are part of the FIDO Alliance. The FIDO Alliance is an open industry association with a very, very focused mission, and that's to reduce the world's over-reliance on passwords. So that aligns perfectly with Nevis, and we're a proud member of that alliance.
Yeah, excellent. Okay, well, this brings us sort of to the closing section. I think I'll go first. You heard this in the beginning. The motivations of the attackers and the defenders are just aligned the same. They're just the two sides of the same coin, really. So the bot-driven credential stuffing is happening, and it's grown to be big enough where we have to do something about it. Financially material, and that's why we see this shift happening, and we saw that in our research, and you've talked about that from a more practical, field-based approach. I'll just quickly say about this. It really does come down to risk. Once we understand it, we can make a better informed decision. Do we just avoid it? We're not going to do this online stuff altogether. We'll probably not. Do we transfer it somehow? Maybe to some degree, insurance policies or something could help with that. Do we just accept it? What we don't want to do is ignore it, which is the same as accepting. What we're talking about today mostly, though, is we can take concrete steps to reduce it to an acceptable level. So that's the business level point that I wanted to make. And then I think you have some closing points from Nevis as well.
Yeah, just to highlight in terms of why the solution is applicable to the various different sectors that you've shown there. So we have rapid integration into existing infrastructure, or we can offer additional new infrastructure in terms of your fully fledged customer identity and access management solution. Nevis as an organization has been in existence for 3 years, but we've spun out of Ad Novum, which is an organization in Switzerland that have been operating in the security space for the past 3 decades. So we have a wealth of knowledge and insight into the security space, the cybersecurity space, and across the various sectors that we operate across. We've had our FIDO Alliance sort of discussion a little bit earlier, though, but as we said, we're a very proud member of that alliance, and to build all of our infrastructure according to those protocols, aligns with various different sort of major organizations globally, ensuring that we remove passwords from the entire user journey. And if you jump down to the next slide, I just want to just give you some indication of some of the customers that are currently utilizing our solution to mitigate these account takeovers and credential stuffing attacks. There are some major banks across Switzerland there, so there's some government and insurance sector customers there. So we operate across a variety of different sector types, and anywhere where there is that potential risk through a username password pair of a bad actor gaining access, we have a solution to mitigate those risks though. So I'd be very happy to share additional information and give a detailed demo to anybody about our product should that be required following this webinar. But Derek, thank you very much. It's hugely insightful to see that information. I mean, I've been mulling over that information for a very long time and have shared it with a number of individuals though. So I'm pleased that we got the opportunity to present it to a wider audience and happy to share it should that be required.
Likewise, I think we could invite, just be a minute or two over, but if there are any questions, we could try to address them right now. I do have one. I'd like to understand, what's a typical rollout process? I mean, we don't just flip a switch and roll out to hundreds of thousands of customers probably. How does it happen typically, the rollout?
It's quite dependent upon which of the particular solutions the customer is looking to utilize. Our web-based authentication solution is in fact an incredibly easy solution to roll out. It's a JavaScript widget that resides on the site that they can roll out. We've had customers up and running utilizing that solution in 24 hours though, so incredibly quick to utilize. Whereas the SDK integration into customers' native apps has taken a little bit longer. It's in fact entirely dependent upon the customer's mobile development capabilities and availability of our team. But we handhold all of our customers through that process, align with their requirements and move at their speed. That can take anywhere between, say, 4 weeks to 2 to 3 months to actually roll out though. What is very interesting is that we've seen from customers is once they've rolled out the solution and implemented the solution, is that they then formulate a number of alternative use cases to what they had initially anticipated those. So an example would be, as you mentioned a little bit earlier, live chat facilities, for example. Customers want to change their details on the account. They can embed a deep link into that conversation, authenticate that is the correct customer that they're talking to, and remove that attack vector for bad actors and gaining access to that account. So there are a variety of use cases that we can share with everyone just to align with your particular sector and how other customers have utilized that. But to answer your original questions, typically those are sort of the rollout times, but it's quite customer and device specific in terms of what they want to utilize.
Right. Okay.
Derek?
Yeah, Alina, thank you.
Unfortunately, our time is up. And I sincerely hope that you have enjoyed today's presentation and found it useful and interesting. On that note, I would like to thank you for your interest and participation. I also would like to say thank you to our presenters. Thanks a lot, Derek and Gavin. And I wish you a lovely evening or afternoon, depending on your location. And I hope to see you in our next webinars. For sure, you will get the recording also afterwards.
Thanks, everyone.
Thanks you.
Everybody, thank you.